Bismillahirrahmanirrahim. Hi everyone, welcome back to the another video. Today in this video, we are going to discuss the most important topic of class 11th, which is GST. GST stands for Goods and Services Tax. Before going ahead on GST, first of all, we have to understand that what are the taxes and how many types of taxes we pay to the government. If we talk about the taxes, it means whatever the amount the government collected from the citizens of a nation, these collected amount or these chargeable amounts are known as taxes. There are two types of taxes. First one is direct taxes and second one is indirect taxes. If we talk about the direct taxes means this type of taxes will be directly paid by the taxpayer. Indirect taxes means it is not necessary that the taxpayers only pay the taxes. Any other person can pay behalf of that taxpayers of these taxes. This is known as indirect taxes. For example, for direct tax, income tax is a direct tax. It means whatever the income you have, and if you are applicable to pay this income tax, then you can only pay this tax directly to the government. No any person can pay behalf of you this tax to the government. And if we talk about the indirect tax, just like a GST is an indirect tax, because if you purchase any material, any of the things from the market, and you pay the amount of GST to that shopkeeper, and the shopkeeper pay your tax amount to the government. So this tax is the indirect tax. Now in this chapter we shall understand the concept of GST. What are the GST? GST means Goods and Services Tax. Before the implementation of GST in India, there were several types of taxes and there were several stages of collection of tax of the government. But after the implementation of GST, the government has wind up these types of various taxes. But still in India, there are few products on which the government is charging the previous tax rate, not the GST, just like petrol, diesel, LPG, all these things. Now come to the GST implementation and other things. The Goods and Services Tax was passed by Parliament on 29 March 2017 and it went into effect on 1st July 2017. So this may be the objective question in your examination, that when the GST has been implemented by the government. So 1st July 2017. France was the first country. If we talk about the GST, many of the people were thinking that GST has only implemented in India, no any other countries. So before India, in 1954, the France was the first country who implemented GST with 4 tax rate slabs in 1954 in the world. And at present, means before the implementation of GST in India, at present there are 160 countries in the world that have implemented GST. Before the implementation of GST in our country, many of the countries have already implemented this GST. Okay, now come to the types of GST. What are the types and frameworks of GST? In India, there are 4 types of GST. First one is CGST, means Central Goods and Services Tax. Second one is SGST, means State Goods and Services Tax. Third, IGST, Integrated Goods and Services Tax. And fourth, UTGST, means Union Territory Goods and Services Tax. Now the question is that when CGST, SGST and IGST, all these taxes, when it will be applicable, what are the procedures of levying these all types of taxes? CGST and SGST will be levied when goods and services are supplied within the state, means not any other state. Suppose you are living in Maharashtra or you are living in Bihar and you are purchasing goods from Bihar and selling it into the Bihar or any other services. At that time, the government will charge CGST and SGST only. Now if we talk about the IGST, IGST will be levied for interstate transactions. Interstate transaction means outside the state. If you are living in Bihar and you are selling goods into West Bengal, Jharkhand, then only IGST will be applicable. And UTGST will be applicable when you are supplying goods and services in the Union territory, just like Andaman and Nicobar and Lakshadweep, Chandigarh. At that time, UTGST will be applicable. So these are the frameworks or types of GST. Now come to the next topic, which is objectives of implementation. What were the objectives of implementation of GST? The first objective, that was one nation and one tax. The government wants to create the concept of one nation and one tax. Second, in order to consolidate a large portion of India's indirect taxes. In India, multiple types of taxes were collected by the government. So, for consolidation of these taxes, for a combination of these taxes, the government has implemented GST. Next, in order to prevent cascading effects of taxes, cascading effects in the sense, uh, before the implementation of GST, the manufacturer were paying various stages of taxes. Suppose you are manufacturing goods, so at the time of manufacturing of goods, you have to pay the tax, maybe value added tax. Whenever you will sold this finished product into the market, at the time of selling of these goods and services, you have to pay the sales tax. And if you will sold this product beyond the nation or beyond the state, at that time you had to pay the custom duty. So on various stages, the taxpayers were paying the taxes. So the government has implemented GST to prevent the cascading effect of the taxes, to put a stop to tax evasion. For the implementation of GST, there were no any single platform of online system like this. So people were stealing tax also. Evasion in the sense tax stealing means people were not paying the taxes to the government. So to stop this one, the government has implemented GST. And in order to broaden the base of taxpayer for online conduction of business activities, the government has also implemented GST and improved distribution and logistical infrastructure. And the goal is to promote competitive pricing while also increasing competition. All these were objectives for the implementation of GST. Now come to the next topic, which is benefits of GST for business and industry. What were the benefits of GST for a business and industry? The first benefit was, in India, the GST regime will be built on a solid IT infrastructure. With the help of GST, a solid IT infrastructure has been developed for business and industry. And next, online services for taxpayers include registration, returns, and payments. All these online services has benefited business and industry very easily, and a simple and clear way to comply. The benefit of GST is also that a clear way to comply about your claims, anything to the government very easily. Next, GST would ensure uniform indirect taxes. It means before the implementation of GST, you were paying various tax rates in multiple states, but after the implementation of GST, this effects had been reduced. It would boost business certainty and easy. If we talk about the benefits of GST to the government, is that it replaces multiple central or state indirect taxes. This is the first benefit. Second, GST would be simpler and easier to administer if it had a comprehensive IT infrastructure. IT infrastructure will result greater tax compliance. And next, seamless transfer of input tax credit from one step to another in the value chain is included in the GST system. Next, GST is projected to reduce the government's tax collection cost. It has also reduced the government tax collection cost. because the government has set up a single platform for all over the nation. These are the benefits of government. For consumer, what are the benefits of GST? Most goods and services in the country were taxed numerous times. Earlier, I have discussed about the cascading effect. Same thing is here. These are the benefits of customer or consumer. There would be simply one tax from maker to consumer. Now, the overall tax burden on the most commodities will be reduced due to efficiency gains and leakage prevention benefiting consumers. So these are the benefits of GST for consumers. Come to the next topic, which is criteria for GST registration. For GST registration, if we talk about the non-hilly areas, it means manufacturing sector. If your turnover is more than 40 lakh or higher, then you have to take the registration of GST. And for service sector, if it is 20 lakh or higher, then you have to take the registration for GST. Jammu and Kashmir and Assam have threshold limit of 40 lakh for goods, and Pondicherry, a regular category state, has a threshold limit of 20 lakhs for. The GST registration procedure has been divided into two parts. For hilly areas, the registration criteria is different, and for non-hilly areas, the registration criteria is different, and for special state categories, it is also different. Now, what are the registration procedures? First of all, you have to fulfill the eligibility criteria. If you are fulfilling the eligibility criteria, then only you can take the registration. Then you have to fill up the application forms, and then documentation submit and verification and approval. After that, you will get the GST registration. Now come to the most important topic that we will use at the time of making practical problem, which is general entries related to GST. Before now, we have learned the general entries without GST. Now we will learn general entries, ledger and GST setup, all the things with GST. Let us see here. For purchase of goods, what entry you were passing before? Purchase account debit to creditors account if you are purchasing goods on credit. If you are purchasing goods on cash, then purchase account debit to cash account. Here the term of GST will also be used. It may be CGST, SGST or IGST, because in question it will be mentioned that where the enterprise is available and from where the transaction is happening. So according to the transaction, you have to use the CGST, SGST and IGST. While transaction is happening within the state, then you will utilize CGST and SGST. And if the transaction is happening outside the state, at that time you will use IGST. But for in case of purchase, only input GST will be used. So purchase account debit, input GST account debit to cash account, bank account, to creditors account, whatever mentioned in the transaction. For sale of goods, if we talk about the sale of goods, then what entry we were using? Debtors account debit, cash or bank account debit to sales account. Here we will use output GST. It may be CGST, SGST or it may be IGST, but at the time of sale we will use output GST. Now in simple way, you have to remember that whatever the expenses is happening from your business, at that time you will use the input GST. You will get the input part of the GST. Or at the time of sale of any goods or services, or at the time of receiving any income from any other sources, at that time you will have to use the output of part of the GST. So purchase just like expense, this time you have to use input GST. While you are paying a rent to your landlord, at that time you will also use input GST. Rent account debit, input GST account debit to cash account or bank account, like this. So whatever expense will be arises from your business, at that time input part of GST will be utilized, and whatever the sale or whatever the income you will received from the any other sources, at that time you will use output part of the GST. And after the end of the month or after the end of the year, you have to set off all these amount, means your input balance will be set off with the output balance. And after that, whatever the balancing amount will be, if balancing amount will be receivable, then the government, from the government you will receive the amount of GST. And if it will be a payable, then you have to pay the amount of GST to the government. So this is the concept of GST. Now next, purchase return, same things you have to do here. Creditors account debit to purchase return account to input GST account. Next, sales return account debit, output GST account debit to debtors account. And next, purchase of any fixed asset account debit, input GST account debit to debtors account or bank account. Next, for any type of expense account debit, input GST account debit to bank account. And next, if any type of income, bank account debit to commission received account debit to output GST account. And next, for goods withdrawn by proprietor for personal use, this time we will use also the input GST, drawing account debit to purchase account to input GST account. For goods given as a free sample, loss of goods by fire or goods stolen, advertisement account debit, loss of goods by fire account debit, loss of theft account debit to purchase account to input GST account. For after that, you have to set off this GST, output GST with the input GST. For setting off these entries we will use. So these are the general entries of GST.